June is National Home Ownership Month. With that in mind, let's go through a market update for June of 2022. So of course, the big story when it comes to housing right now is the interest rate. Right now, a 30-year fixed mortgage is at over 5%, which is way higher than it was last year at this time. And I know that the Fed has said that they are going to raise their rates several times in the next year and a half, but the mortgage rates are not really tied to the Fed rate. They are more closely tied to the 10-year Treasury note. So I think what's going on right now, the reason that they went so high so fast, is that mortgage banks are pricing in all of that market volatility that's going to come with those Fed rate hikes and with the inflation that we have out of control right now. But if it makes sense for you, those adjustable rate mortgages are hanging at about 4%. That's pretty good. Now, I know that these rates are not as good as they have been in the last 10 years, but if you look back over history, they are better than they have been in the previous 4 decades before that. I know when I bought my first house 25 years ago, the rate was about 7%, and I felt really good about that. But we real estate agents who are working with those younger buyers have to keep in mind that these are the highest rates those people have probably ever seen. So is it a market correction? Well, I say no. The actual definition of a financial correction is a loss of 10%. We still have plenty of people forecasting appreciation in home values of 9% this year. But there is no doubt that the market is shifting from the anomaly of these last 2 years that we've had. But the ball is still in the seller's court right now. Existing home sales are heading back to, but are still higher than, pre-pandemic levels. And inventory is half of what it was in 2019. And just to give you an idea of where that low inventory puts us, look at the hole that we still need to dig out of just to get back to even. 42% of listings are still under contract within 1 week. And the average days on the market is only 17 days. Almost half the states in the country are still averaging 5 or more offers per listing. Now, the number of listings that are opting for a price reduction is rising. However, I'm wondering if they're just getting spooked by the media, because house listings are still selling for 2.8% above listing price. With the average listing selling within a week, maybe they'd have been fine if they'd have waited just a couple more days. And sure, the market can change really fast, but I think the support is still there to keep us from making any wild swings. And we do still have a housing shortage crisis right at the same time that the millennials, the biggest demographic, is just getting into the market to buy their first home. So that buyer pool that may have been shrinking from higher interest rates is surely being buoyed up by those extra millennials. And even if we do go into the R word, recession, that probably won't bring housing prices down. Housing prices have gone up in 4 of the last 6 recessions. Put all these things together, and I say it's not looking like we're gonna have a crash anytime soon. Now, for you buyers out there, I am so sorry. Life is just not getting any easier for you. Those higher interest rates means more of your monthly payment goes toward interest and less of it to a house, meaning that you can afford less house. Just last year, the mortgage payment on a median priced house was $1,688. 1 year later, that same median house mortgage payment is $2,404. That is an increase of 42% in 1 year. And mortgage credit is just not as easy to get as it used to be. The banks, who had totally clamped down after the 2008 housing debacle, had just started to kind of loosen up their restrictions, making credit a little easier to get. But the pandemic brought a quick end to that, and now the banks have clamped down again. Not to mention that rents are up in 47 of the top 50 markets. And as rents go up, that pushes more people into the already crowded buying pool. And as these rates kind of chill out a little bit, those buyers that had maybe opted out for a little while just to make sure that all the crazy was gone, they might jump back in. So if you were hoping that these crazy interest rates were going to push some of those buyers out, and I'm sure that it did, but probably not enough to ease up that competition too much. So in honor of National Homeowners Month, I am going to put in the description below some summer buying guides, both for sellers and for buyers. Now, whether you are a buyer or a seller this summer, you are going to need to have a good idea of what this market means for you. Go watch this video right here where we take a deeper dive into why the market is the way it is right now, which will help you figure out the best way for you to move forward. Thanks for watching. See you next time.